Bill and he's from BlackBull Markets. Today, the 21st December 2020, markets have opened with a bit of a gap this morning, specifically more so on the pound against the US dollar, about 150 pips there as the UK comes off a tier 4 lockdown and the Brexit worries continue to weigh a cloud of uncertainty over the markets there. This morning we've seen equities slightly cool off in the US futures and gold recently surging. That's the chart behind me, hitting that 1900 mark. That's the target we had on our charts from last week. Now we're going to talk about a trade plan for the rest of the week, of course, considering it to be a quieter week in theory in the markets, but we are looking at some volatility and therefore some opportunities we can find in the markets. Now, gold. Let's analyze the chart a bit. Now, of course, we had that big fall on November the 9th. That was when the initial Pfizer vaccine was announced, and that too saying of a 94% effectiveness rate. More vaccine news came out in the markets, and gold broke a key support level around the 1853 mark, which then broke lower, and we saw a sharp reversal of that 1763 low in gold, all the way back above towards that support area that we've highlighted here on this chart, which formed another base of support around the 1850 level. Ever since we hit that 1850 level, markets have been struggling almost, but then picking up a leg higher, crossing another resistance area around the 1866. A little bit better for you guys. Around 1866. A move past that, always eyed that $1,900 level as your target. And today, as we've said, we've just wicked above 1900. That was the high. It's rejected it for now. 1900 is crucial because it also forms as a support of a previous consolidation area in gold from October. And as you know, gold's been operating in a very choppy consolidation zone type of trade recently, so we could well see this play out. And again, if we look at a price target to the upside, a close above 1900 could indicate further price action towards 1932, and we could see gold move up to 1932 and continue to consolidate using $1,900 as a base for the rest of the year's trading. So let's have a look on a daily time frame to really see that in action. You can see, if we zoom in just slightly, of course, that big candle that we saw on the 4-hour time frame will have a view to be filled or to be recovered, and then that's the position playing above 1900, getting into that zone, and then you're targeting potentially 1932 at the top of that zone for almost full recovery. It's also a 50% retracement level from this high to this low here at 1746, and of course 2063. Now, what we have seen in gold is a lot of consolidation. However, there is bias still to the upside. We could see that 1746 is a really nice pullback area for buyers to get back in who are looking for long-term value in gold, especially heading into next year. Next year, interest rates are expected to remain low. Of course, this weekend we saw an unprecedented rally in Bitcoin, unrelated to gold, but the argument does beckon, will digital gold, Bitcoin, be the new gold, or will gold continue to hold its value? The idea is that gold will continue to hold its value into next year. It is a store of wealth, a hedge against inflation. We do know that inflation expectations are on the up for next year, and also investors will continue to look to hedge a lot of their risk on the US dollar, which is weakening, slightly stronger today, but despite that, we're still seeing this rally in gold. So gold buyers for next year is bullish in my view. And if we switch to some higher time frames, this is a weekly chart, we could continue to see gold use this level here at the 1866 level as a key support to look to form legs higher. If it does break above, do expect to move above 1932 perhaps, to use as a guide to see how high we can go. Of course, 2K is that magical number. If we do reach 2K again, does show appetite to move higher in the metals. Expect to see more consolidation throughout the course of next year. The idea is to find pullback opportunities to potentially take this higher. There is more of an unlikelihood of gold falling as interest rates, as I said, are expected to remain low. We do have inflation expectations higher for next year, and of course gold is a hedge against inflation for 2021. So these are things to look out for. What we have seen though is the news announcement of vaccines send gold lower. That was a bit of a surge to the downside, and that's your dip over there. So if the vaccines do work next year, people vaccinated, people back in work, people healthy again, then gold may have another leg lower. However, the overall fundamental side is to go long gold and to hold gold for potentially 2 or 3 years, or at least until the inflation cools down, interest rates begin to rise again. But until that time is upon us, gold is bullish in my view. So do stay tuned. $1,900 is that new high that we're looking at today. Across above puts into play 1932. Keep your eyes on those two levels and trade safe. All the best of luck. Good luck.